Hello, this is Megan Horneman, the Chief Investment Officer for Verdence Capital Advisors. It's February 1st, and we're coming to you with our regular segment of Markets with Megan. We're going to talk about the ISM Manufacturing Index that comes out in the first date of every month. This index measures the manufacturing sector. It's been in what we consider contraction territory now for 15 consecutive months. That's a level below 50 on that index. But the good news around this report is even though manufacturing has been contracting for well more than a year, it did increase to its highest level since October of 2022. So let's jump into some of the information within this report. There was a pretty big uptick in new orders. It was the biggest jump since June of 2020. That's a good sign from an economic standpoint. But when you look at what the Fed may be paying attention to is the big jump. The biggest increase we saw was in prices paid. This is an inflationary concern. This is something the Fed will pay attention to. What we saw was that had its biggest jump since December of 2020. Now, the majority of all these other components of this index, whether it's the backlog of orders, employment, new export orders, inventories, all these things are still in contraction territory. The employment one continues to be weak, and that's something that we're going to be watching in the upcoming jobs report as well. That's all we have from the manufacturing side. We'll be back tomorrow with some of the information regarding the jobs report and what that means for the Fed and the equity markets going forward. If you have any questions or comments, please feel free to reach out to podcast@verdence.com. Thank you.